$106,000 is exactly how much I made in the past 3 months utilizing the RSI indicator, or the relative strength index. And I'm going to show you exactly how you can use it to implement this into your trading to make major profits in the next month. Now, take a look at my portfolio right here. We're logged in. I want to show you the reporting period from September 1st of 2024 to the end of November. We're currently in December, so I wanted to show you the past 3 months, and we're at a net gain of $106,000 with a gain-loss ratio of 96%, meaning I'm winning 96% of the trades. So I've been able to do this utilizing the RSI, and as you can see, the current live portfolio that I show here on YouTube is at $676,000. Now, before we get started, if you want my free options and stock plays directly in your email inbox for free, click that very first link in the description. And if you have any questions throughout the video, you could either comment down below, I answer all comments, or you could DM me personally on Instagram at itsryanhildreth. I love answering all my messages, and you can kind of see inside of my personal life as well. So let's go ahead and jump into it. Remember, this is not financial advice. This is just me sharing exactly how I've built wealth utilizing the strategies I'm about to show you. So how I made $106,000 in 3 months using the RSI. Now, it came down to 4 principles, and we're gonna walk through each one of these principles, and I'm gonna show you live examples on the charts so you can apply this yourself. So let's go ahead and take notes. Now, the very first principle is understanding the overall macro environment, bull or bear market. So are we in a bull market or are we in a bear market? Understanding that macro environment is going to help you so you don't lose any of your money. Now, number 2 is understanding the underlying asset. Which stock are you trading? How does that stock move? Is it bullish or bearish? Is it moving with the trend? These are all things you must understand. Number 3, understanding and identifying key levels on the relative strength index combined with one other indicator, which I'm gonna show you, special indicator that I use, and I'll show you that on the charts. And then number 4, choosing the right product. So you're either buying the stock outright, buying options, or selling options. Either one of those 3. And those are each independent for the amount of risk you wanna take, the amount of money you wanna make. So depending on which one of those 3 it is, you have to deploy the strategy differently. So let's go ahead and dive into it. Now, the very first principle is understanding the macro environment. So we are currently in a lowering interest rate environment. So the Federal Reserve is lowering interest rates. They literally just cut interest rates by 25 basis points. And that's cheaper for businesses and consumers to borrow money and spend. So this is good for the markets. This is what fuels bull markets. More money is borrowed by the US government via treasury bonds auctioned off by the Federal Reserve. Debt creates money, okay? So the more money that is created via debt, the more money that is plowing into assets that appreciate, such as stocks and real estate, because rich people need to put their money where it's not going to lose purchasing power, right, due to inflation. So not understanding this can create uncertainty and can leave you with big losses. A lot of people comment on my videos like talking about bear markets, talking about, oh, well, what if it's a bear market tomorrow? And they simply don't understand the macro environment. So I want to teach you this so that you understand it and you can kind of see and spot trends of, oh, hey, we may be entering into a bear market soon, or, oh, hey, we're gonna be in a bull market for a long time because interest rates are still high and the Fed is continuing to lower them. All right, so let's go ahead and look at the charts and see how this plays out, right? How does interest rates affect the markets? Well, as you can see back here, this is QQQ, by the way. I like to look at QQQ, which is the NASDAQ 100. You could look at SPY, the S&P 500, that's fine. We're just gonna look at QQQ. So back in 2022, November, okay, or actually December, is when the Fed announced that they would be increasing interest rates perpetually until inflation has been tamed. And when that happened, okay, we dropped about 16% within the next month, all right? So that was a huge downturn. Then we managed to go all the way down within the next 8 months, right? We went down 36% on QQQ, okay? I believe the S&P 500 was down around 25%. So this whole year, we were going downwards because the Fed just kept raising interest rates, right? And then we had a little bit of a recovery because the market was expecting, oh, hey, inflation's getting a little bit better. Maybe the Fed is going to ease up on raising interest rates. And back here in October of 2023 is when the Fed flipped. Okay, this is when they said we're going to be lowering interest rates, for the foreseeable future, and the market was pricing in like 6 interest rate cuts. And as you could see, the market rallied. Okay, we've had a bull market since basically that point, October 2023, but we didn't fully recover from this inflation-induced bear market really until about 2024, right? This point right here, January 2024. So since January of 2024, this year, we have gone up, okay? So we are in a bull market, and I do see us being in a bull market for the foreseeable future until things change with the Fed, okay? So that's understanding the macro environment and how that affects stocks, okay? Most stock, all of the QQQ is composed of 100 of the top technology companies. Obviously, there's some in there that aren't tech companies like Coca-Cola. I don't consider that a tech company, but you get the gist. Stocks go up when interest rates are low, okay? So that's macro. Now, number 2, principle. Understand the underlying asset you are trading. So ideally, the chart should look good. It should be trending upwards for a long period of time. There's ugly stocks out there, and I'll show you which ones I'm going to look at that are definitely harder to trade. You want to, if we're in a bull market, it's ideal that the stock is also going up and is very bullish, right? So if you trade fundamentals as well as technicals, then believing in the company's fundamentals helps as well. I like fundamentals. I look at fundamentals. So that's something that helps me make a decision on which stocks to trade, okay? It doesn't have to for you necessarily, but if you want to look at fundamentals, it's just a little bit easier. Is the stock liquid? Is there enough shares? Are you trading a penny stock? Are you trading a mega cap stock? Obviously, the liquidity is going to be different. You want to have a stock that has enough shares being traded or options being traded for you to get in and out easily. Because if you're trading a super small stock that doesn't have enough liquidity, then there may not be a buyer or a seller on the other side of you placing an order. And that's not going to be good, okay? So you want to make sure the stock is liquid. Is the stock moving with the macro environment? This is key. If we're in a bull market, you ideally want to be trading bullish stocks. It's very hard to trade a stock that's bearish in a bull market because it's just kind of doing its own thing and you don't really know, you don't see a clear direction, right? Like when the QQQ is going up on the day, most likely the stock you're going to be trading is also going to be going up as well, maybe even more than QQQ. So that definitely helps. So let's look at 2 stock comparisons. This first comparison is a stock, okay? American Airlines. You've probably heard of them. Maybe you even use their services, okay? American Airlines, right? Airline company. Ever since COVID or 2020, boom, we had this huge drop, right? They have not recovered since then. It's been 4.5 years, almost 5 years, and they have not recovered since then, okay? So the stock has done nothing but just go up, down, up, down, up, down, up, down, up, down, and it's just very kind of independent from the overall market, which makes it hard to trade. It makes it hard to kind of have a clear direction. And also, you're not going to be making a lot of money on these little tiny up moves, right? Compared to a stock like NVIDIA, okay? This is from 2020, way back here. You can't even see because it's so, the stock was so low back there at $7, right? And I was trading it since then. And look at what the stock has done now. Just nothing but up, okay? In fact, I'm going to change this to the weekly so we can see kind of a better depiction of that, okay? Yeah, this is exactly how it looks. So it's very easy to trade this stock because when the overall market's going up, this thing is ripping, right? This thing is ripping. So let's go ahead and go to the daily chart. I like looking at the daily. And this is kind of the past year, right? This thing has just ripped up, down, up, right? A little bit sideways as of now, but we had at the beginning of the year, a really good run right here. The stock literally went from $48 to almost 100. So it literally doubled, okay? Doubled from there, and then what, another 50% right there, okay? So this is a clear trend right there. This is an underlying asset I could understand. It moves with the market. It's a good company. They have profitable earnings. They have a good PE ratio, right? Those are all things that I look at, okay? So now we have the asset. Maybe we're like, hey, NVIDIA looks like a good stock to trade. The next thing, identifying key levels on the RSI. So the relative strength index is a momentum oscillator that measures overbought and oversold conditions. So we can take a look at the RSI on NVIDIA and we can kind of see, is it highly overbought? Is it trading at or above 70? Or is the stock trading at or below 30? Is it oversold? And let's go ahead and look at the charts, okay? So we're gonna go back to that daily chart. I like looking at the daily chart because I like participating in these huge swings, right? Versus if I'm looking at the 15-minute chart and each one of these candlesticks is only 15 minutes, you're gonna be participating on smaller moves, right? Now, if we look at the daily, we could see there's been many times where the stock has been way overbought. So this right here is the RSI. What you're gonna go is you're gonna go to indicators. This is Trading View. And you're gonna click on Relative Strength Index, and that's gonna pop up this purple bar right here. Now, we have these two lines. The bottom line is at 30, the top line's at 70. 70 means we are overbought if it's above 70 or at 70. If it's at 30 or below, we're oversold. And rarely does NVIDIA get into oversold conditions. As you could see, there was like one time back here in September 2023, we were, I would consider this oversold. It almost touched the 30 line. It's at 31. Back here in April of 2024, we got to 34. That's pretty oversold for NVIDIA, considering there's been many times we're overbought. Look at how long we're overbought here, from January 2024 all the way to March of 2024. So 3 months just completely overbought and the stock rallied, okay? So this is also one thing that people, when they look at the RSI and they're saying, okay, oh, this stock is overbought. Maybe they see it just from right at this point. And they're like, I'm gonna short this stock because it's overbought. But yet the stock continues to stay overbought for another month or two. That can happen. So you do have to look at that and utilize that for your notes, right? Don't just short a stock because it's overbought. That doesn't mean anything, right? Or don't just buy because it's oversold. I like to pair it with another indicator, which you can see on the chart, these bands, okay? This kind of like blue section right here, all right? Now, this is called Bollinger Bands. So what I like to do is go to indicators and type in Bollinger Bands and click on that, okay? And what the Bollinger Bands show you is these top and bottom lines, right? The top and bottom lines are 2 standard deviations away from the average price. So that what that means basically is that the stock is gonna stay within those 2 lines 95% of the time. 5% of the time they will go outside the stock, but usually the price reverts back to the mean or back to the average price. And as you can see, it happened right here. Boom, popped out of this bottom Bollinger Band and sucked back in. Right here, popped out, sucked back in, right? Touched the bottom one, sucked back into this middle line, which is the mean price, right? And it happens every so often. Even right here, I have arrows on where it popped out of the top Bollinger Band and sucked back in, okay? So that's another indicator that I use. So right here, we were oversold, right? The RSI was trading at 33. For NVIDIA, that's extremely low. And also, we popped out of the lower Bollinger Band. So 2 of those things combined tell me that, hey, this is a good entry for a long position, okay? Now, I like to give myself enough time to be right. I'm on the daily chart, so I have to give myself at least 30 days to be right. I don't want to take this trade and only give myself a week to be right, because it could take a couple weeks or even a few weeks to play out. And that's what August 5th, we were down here, and it took up until August 20th to fully make that move, right? So you want to make sure that you give yourself enough time for it to play out. So I like to combine the RSI with the Bollinger Bands. That's kind of the best combo, especially when you're trading options like me, okay? NVIDIA, I know that if NVIDIA gets below 35 on the RSI, we are oversold, okay? Other stocks may be different. Maybe that standard 30 or lower, right? But for NVIDIA specifically, because it's such a bullish stock, 35 is kind of my marker to get in. And right here, as you can see, it traded at 37. Okay, that's near 35. That was a good place to get in. Bottom of the Bollinger Band, that was a wonderful place to get in. There is another opportunity right now, okay? And I have currently over $175,000 on the line in NVIDIA. We're trading at 36 on the RSI. And we're also at the lower Bollinger Band. So that tells me in the long run, this is a good spot to get into NVIDIA, okay? So I entered a bunch of different strategies, which we'll get into next, okay? Which is identifying which product to use. Do we buy the stock outright? That gives you a 1-for-1 move, right? NVIDIA goes up $1, you make $1. Buying options gives you leverage on capital. So you can use that same amount of capital that you would use to buy 100 shares, but you could purchase 3 to 4 call options that would let you control 300 to 400 shares. So you get 3 to 4x leverage on your money. That's another option, right? That's the riskiest option, but it's also going to make you the most. Buying the stock is going to be kind of in the middle. You have a 50-50 chance, right? But you're going to participate in the move. And then selling options, which I do a lot of, 90% of my trades are selling options, gives you the least amount of theoretical profit, meaning if the stock actually goes in the direction you want it to, but has the highest probability of making money 70% plus of the time. Okay, that's why my win ratio is so high at 96% for the past 3 months, because I'll sell options on NVIDIA down here, right down here, and even if it doesn't go up, like even if it just traded sideways, I would still make money, okay? Or even if it goes down a little bit, but not below my put that I sold, like if I sold a put right here, as long as it doesn't go below this in 30 days, I make money, okay? And I'll show you 3 trades that I specifically would do on NVIDIA. So right now, let's start with the safest trade, selling options, okay? Cash secured puts. Obviously, you need enough collateral to buy 100 shares. So on NVIDIA, we're currently trading at $129, okay, $129. So you'd need $12,900, give or take, okay? So let's go ahead and see which option I would sell. I would like to get down here to like this 120 strike. That'd be great to get all the way down here because I don't see NVIDIA going below that, okay? So let's go ahead and go to the options chain. I would go 30 to 45 days out. We'll go 36, okay? And let's see if we can get down to the 120 strike. Perfect. So that's a 28 delta. So that has a 28% chance of being in the money, or an 82% chance, or 72% chance rather, of being out of the money. So this is a good probability of profit, right? It's going to pay you out $390 if you sell this particular option. So you'd click on the bid, right? Sell 1 Jan 24, 36-day 120 put, and you collect $390. And the capital required would be $12,000. Okay, so if the stock finishes below 120 by expiration, you'll be forced to buy 100 shares at 120, but you get a discount and you get paid $390. Okay. So that is the sell put. Now, the second option is buying stock outright. This would be this kind of the middle, not the safest, but the middle risk tolerance. So obviously you're gonna have to stomach fluctuations in the stock, but you could just buy shares, right? You could just press buy and then buy as many shares as you want. I like to do lots of 100, but if you don't have that much capital, you could do 5 shares or 1 share or 50 shares, right? And then, yeah, you'd basically buy the shares. And then the last option is going to be the best bang for your buck, okay? So if you have enough money to buy 1 call option, but this is going to be a leaps call option or long equity anticipation security, meaning it expires in 365 days to give you enough time to be right, this is the best option. So this is actually, if we go to my portfolio, my positions, I currently have cash secured puts right here, right? I have about 9 of them. I have 400 shares right here, okay? And then I also have these call options that expire in 365 days. So I paid $17,500 for these, okay? But I'm gonna show you exactly which one I purchased. So I went out on the options chain to December 19th, 365 days away, right? And the price of NVIDIA right now, it doesn't really, like if you wanted to do this trade, it doesn't matter as long as it's between 140 and 120. Anywhere in here is good because in the long run, I see this thing running up to at least 170 to 180, okay? So I know this video is a little bit, probably a week old, but as long as the stock's between 120 and 140, you're good to go. If it's higher than 140, then you can make your adjustments. But let's go ahead and go to the option that I was talking about. December 19th, 2025, 365 days out. And you want to go to the 70 delta. So 70 delta is going to be the 119 strike. You're going to pay $3,470 for that to control 100 shares. But because it's 70 delta, for every dollar the stock goes up, you're going to make 70 cents, okay? So if you want to control 100 shares without having to pay $12,000, you could pay $3,400, control the same amount of shares, and it expires in a year, so you have plenty of time to be right. This would be the way to go. But understand the risk is you can lose the premium you paid, right? If the stock goes to 50 or 100, which I don't see it doing because of the indicators we talked about, the RSI, the overall macro environment, the fundamentals of the company, and the Bollinger Bands, this should be a good play, okay? So this is the one I would purchase. And then watch your shares ride up, right? That's all you have to do. Watch your leap option gain value. And then once you hit, I don't know, 30, 50, 100% of your profit on that, you can go ahead and close it out if you want. But I like to set a price target. So for me on NVIDIA, 170 is kind of my price target to start exiting most of my position, okay? So I hope you enjoyed this video. If you got value out of it, make sure to hit the thumbs up. There's another tutorial right here. You could check that one out, and I will see you in the next one. Take care.